Hi friends, today's topic is receipts and payments account in non-trading concern lesson. To understand this lesson properly, you have to watch my previous video, that is non-trading concern introduction video, because the meaning of NTC, then what is meant by capital expenditure, revenue expenditure, capital income, revenue income, and the basic terminology used in non-trading concern lesson like subscription, legacy, life membership. All these points I explained in that video. So without watching that video, if you watch this video, you cannot understand it. Right. Receipts and payments account. Non-trading concern are not-for-profit organizations. They prepare final accounts. Their final accounts contains three components: receipts and payments account, income and expenditure account, finally balance sheet. Now, why we prepare receipts and payments account? To prepare income and expenditure account and balance sheet, we need some information. That information we can easily get from receipt and payment account. Once you recollect a sole trader's final accounts, we prepare trading account, profit and loss account, and balance sheet. On what basis we prepare these three? Trial balance. In question, trial balance will be given along with some adjustments. Based on that trial balance, we prepare these three. Similarly, in non-trading concern final accounts, in question, he gives receipts and payments account along with some adjustments. Based on this table, we prepare income and expenditure account and balance sheet. So receipts and payments account is useful to prepare these two statements. It doesn't mean that NTC, they don't prepare trial balance. They too prepare trial balance, ledger, journal, and cash book. Why they prepare trial balance? Because by following double entry system, they write some journal entries in journal book and they posted that journal entries in respective accounts in ledger book. When any firm follows double entry system, then to know whether these entries are posted in the accounts properly or not, they should maintain a trial balance. To check the arithmetic accuracy of accounts, they should prepare trial balance. So NTC too prepares trial balance. But based on trial balance, if you want to prepare income and expenditure and balance sheet, it is little bit inconvenient. Clear? So we depend on receipts and payments account. Then receipts and payments account. It tells about what? It tells about cash inflows and cash outflows. When you run any non-trading concern, then regularly we should meet some expenses. For what purpose we established that organization? To provide that service. Regularly we should spend some amounts. So what happened here? Cash is going. It's a payment. and we need some funds to meet that regular expenditure. So we collect that funds from different sources. So what happened here? Cash is coming. In receipts and payments account, we are going to mention from which sources cash is coming into the firm and how we utilize that funds. Then finally, how much cash is left over. So receipts and payments account gives the information regarding cash. When we maintain bank account, even we can show bank transactions also. When money is deposited in bank, when money is withdrawn from bank, that is also a part of receipts and payments only. So cash transactions and bank transactions, both we record in this book. Now, since this book tells about cash, this account is known as real account. You know, accounts are of three types: personal accounts, real accounts, nominal accounts. Receipts and payment account comes under which account? Real account. Because this account tells about cash. Cash is an asset. So it is a real account. Then what is real account principle? Debit what comes in, credit what goes out. So according to that, when cash is coming into the firm, we should debit it, and when cash is going from the firm, we should show that in credit side. Then receipts and payments account will be started with opening cash balance. In question he gives us some cash balance. That balance we should take in debit side, opening balance of cash, some amount. Sometimes he may give opening bank balance also. Then that amount also we should write in debit side. Sometimes he gives opening bank overdraft balance. Since it is a liability, since it shows a credit balance, in credit side we should write that. Clear? Assume that he has given opening cash balance, so debit side we have taken that. And whatever amounts come to us, all those amounts we should write in debit side. The amounts which we pay, we should credit them. Then finally, we should calculate the closing cash balance. For example, debit side total is, assume 1 lakh rupees. Then credit side payments total is, assume 80,000 rupees. Then we are left over with how much cash? 20,000 rupees. Then that 20,000 rupees, we said we should show which side total is less. So credit side 20,000. What we should write for that? By balance carried down. So remember, receipts and payments account starts with opening balance and ends with closing cash balance. Means the purpose of preparing receipts and payment account is to know the cash in hand at the end of the year. Clear? The next point is, in receipts and payments account, date column is not there. Why? Because it is a part of final accounts. Final accounts, when we prepare at the year end. So receipts and payments account is prepared on 31st March 17, assume. So closing date is 31st March 17. Then what will be the starting date? 1st April 16. So here the accounting period is financial year. Then our current year is 2016 and 2017. Then what is the previous year? 2015 and 16. Next year 2017 and 18. Clear? Now for current year period, at the end of the year, we are preparing this receipts and payments account. Next, in current year, receipts we record in debit side, current year payments we record in credit side. While writing the receipts and payments, you should remember one important point. That is, receipts are of two types. Incomes are of two types. Capital receipts or capital incomes and revenue receipts or revenue incomes. Similarly, payments or expenses are of two types. Capital expenses, revenue expenses. Now in receipts and payments account, capital items and revenue items both we consider. So you need not to show a discrimination between capital item and revenue item here. What is meant by capital expenditure? In my previous video I explained that if any expenditure is spent rarely, if any expenditure gives a long-term benefit to the firm, it is known as capital expenditure. Then what is meant by revenue expenditure? Recurring expenditure. If any amount is paid again and again, it comes under recurring or revenue expenditure. Similarly, capital receipt means what? Rare income. Suppose we have taken bank loan. We sold our fixed asset to somebody. Money comes. So it is a rare income. Daily we are not going to sell our fixed assets. Daily we are not going to take loans from bank. So rare income is called capital income and regular income is called, repeated income is called revenue income. Now in receipts and payments account, capital items, revenue items, both we should take. Then second point is, in receipts and payments account, debit side receipts we write. While writing the receipt, that income may belongs to current year, previous year or next year. It doesn't matter. If that income is coming in current year, we should write that in debit side, and that income may belongs to current year, previous year or next year. You need not to bother about that year. Similarly, expenditure side also, current year expenses, previous year expenses, next year expenses. All these three we take. For example, take salaries. In current year, what is the current year? 2016-17. In current year, we should pay 5,000 rupees. We paid in current year only. So current year salary is how much? 5,000 rupees. And in which year we paid? Current year only. So it comes in receipts and payments account. Last year, what is the previous year? 15-16. Last year, we had to pay 4,000 rupees salary. Expenditure belongs to which year? Last year. But when we paid that in current year, in which year cash is going? Current year. So even though that expenditure belongs to previous year, you should write that in current year receipts and payments account. Why? Because in current year only cash is going. Similarly, next year, that is in 2017 and 18 year, we should pay salaries 3000 rupees. What we did? We paid that amount in current year only, prepaid salary. So expenditure belongs to which year? Next year. But when we paid that? Current year. In which year cash is going? Current year. Therefore, write in current year receipts and payments account. So be clear with this point. The expenditure may belongs to current year or previous year or next year. It doesn't matter. If we pay that expenditure in current year, we should record that in receipts and payments account. For incomes also, same point is applicable. Clear? So regarding receipts and payments account, remember all these important points. What are they? First point is, it is a real account. So real account rule we are following. That is, debit what comes in, credit what goes out. As per that rule, receipts are to be debited, payments are to be credited. Then receipts and payments account starts with opening cash balance and bank balance, and it ends with closing cash and bank balances. In receipt side, in debit side, we should record capital receipts and revenue receipts. Payment side, we should record capital expenses and revenue expenses. Similarly, incomes and expenses may belong to current year or previous year or next year. It doesn't matter. If income comes in current year, we should record here. If we spend that amount in current year, we should record here. Clear? Next. After listening all these points, you may get one doubt. What is the purpose of preparing receipts and payments account? Our answer is closing cash balance. And debit side, cash receipts we are writing. Credit side, cash payments we are writing. Then same thing we do in cash book also. NTC also prepares cash book. It may be a simple cash book, double column cash book, or triple column cash book. Cash book contains what? All cash receipts in debit side, cash payments in credit side. We start that with the opening balance, and finally at the end of the month we calculate the closing cash balance and bank balance. In receipts and payments account also you are doing the same. Then what is the exact difference between cash book and receipts and payments account? When this is prepared, again, why we should prepare receipts and payments account? Clearly observe this point. Receipts and payments account is a summary of cash book. What is the meaning of that? Cash book. Once you recollect the format, two sides, debit and credit. Debit side we have date, particulars, LF number, amount. Credit side also same columns. I am talking about simple cash book. We open date columns here. Means what? On daily basis we are entering receipts and payments in cash book. But if you see receipts and payments account, is there any date column? No. Receipts and payments account is prepared at the end of current year. So For example, salaries paid. What is the entry for that? Salary account debtor to cash account. In cash book, we said we post this credit side. Credit side by salaries. For example, 10,000 rupees. When we paid this salary? On 1st January 2016. Similarly, next month when you prepare cash book, on 1st February 16 also we credit salary 10,000. Then third cash book, third month cash book, there also we credit salary. Means in one current year, how many times you are crediting salary? 12 times. Assume each time we paid 10,000 salary. Then total salary is 1,20,000 rupees. So cash book contains the information on daily basis. But can you know the total salary of current year by seeing this cash book? No. On when, how much salary is paid? We can know by observing this book. If you want to know total salary, what you should do? Take one calculator, add all these 12 salary amounts, then you will get that amount. It is little bit inconvenient. For each and every amount, we should do in the same way. Electricity bill amount we want. Take calculator, search for electricity amounts, add all, then only electricity bill amount comes. It is not the correct way. So to prepare income and expenditure account and balance sheet, we want consolidated figures. We want the final results, total salary bill, total electricity bill, total rent, total tournament expenditure amount. Like that, the final amounts we want, not individual amounts. Then what we do? All these 12 salaries we add, and the total salary figure 1,20,000 we show in receipts and payments account. We said it appears credit side. By salaries 1,20,000. Got the difference between these two? So remember this point. Receipts and payments account is a summary of cash book. Clear? Right. We'll do one problem now. Question is this. From the following particulars, prepare receipts and payments account for the year ended 31st March 2017. And question contains some receipts and payments. Then, first what? Cash in hand. This is called opening cash balance. Our accounting year is 2016-17. Since they are following financial year, what is the starting date? 1st April 2016. On that day, how much cash we have in the organization? 50,000 rupees. This is called opening cash balance. Since it is an asset, it shows a debit balance. Therefore, debit side, we should record that to opening balance. 50,000 rupees. Sometimes he may give cash at bank also, opening bank balance. Then that amount also we should write in debit side. Next, subscriptions. In my previous video, I have explained what is meant by subscription. Right? Subscription means what? When a member wants to continue his membership, then every year he should pay some amount to the organization. So from organization point of view, we should think no. Therefore, to organization, this subscription is what? Income. Cash is coming. You need not to think whether this is capital income or revenue income. Why? You know, in receipts and payments account, we record both. So you need not to bother about that category. Where you analyze like that while preparing income and expenditure account. Now, simply what you should think, cash is coming or going. Is it a receipt or payment? If it is a receipt, write down in debit side. If it is a payment, credit it. So, subscriptions means what? Member is paying to us. Cash is coming. Therefore, it should be debited. Subscriptions amount is 11,000 rupees. Then entrance fee means what? When any member is joining in our organization, then he has to pay some initial amount. That is called entrance fees or admission fees. Cash is coming. Therefore, it should be in debit side. Amount is 2,000 rupees. Next, donations collected. Donation means if anybody gives a gift to us in the form of cash, it is called donation. Cash is coming here. So, write down in debit side. Amount is 8,000 rupees. Honorarium paid means what? For example, there is one commerce college. So daily commerce sir is taking classes. One day, the management wants to arrange one special class. Not by this commerce lecturer. They want to invite one chartered accountant from outside. So one chartered accountant came on that day and he delivered his lecture. He took 1 hour class. It is not at free of cost. So management paid 20,000 rupees to that person. It is an expenditure. It is a payment because cash is going. Then how to write that in our accounts? Can we write it as wage? No. Because he is not a laborer. Can we write it under salaries head? No. Why? Is he your employee? No. Only for one time he came and he delivered his lecture. So what is the appropriate word here? Honorarium. With the honor, we paid some amount to him. Clear? Cash is going. Therefore, we should write that in credit side. Amount is 3,000 rupees. Next, rent paid for 2015-16, 2,000 rupees, 16-17, 1,000 rupees. Our current year is 2016 and 17. Previous year 15-16. In last year we had to pay 2,000 rupees rent. We didn't pay that. When we paid that amount? In current year. So rent belongs to which year? Last year. But when cash is going? In current year. I said while preparing receipts and payments account, you need not to bother about the year. That expenditure or income belongs to which year. You need not to bother about that. What you should observe? When cash is going. In current year, if cash is coming, record in debit side. If cash is going, record in credit side. Now, in current year, towards rent, cash is going here. Therefore, record that in credit side by rent account. In inner column you can show previous year amount is 2000 rupees and current year amount is 1000 rupees. In outer column 3000 rupees. Next, computer purchased. Cash is going, therefore credit side by computer 5000. Remember, if any fixed asset name is given in the payment side, what is the meaning of that? We purchased it and we paid cash. Next, salaries. Cash is going, we paid salaries. Tournament expenditure. Tournament means game. We conducted some game and we spent some money towards that. It's a payment. Cash is going, therefore credit side. Next, shares purchased. We have some savings money. That money we invested in one public limited company by purchasing their shares. Cash is going, therefore credit side. Repairs. Cash is going, credit side. Dinner expenses. It's a payment, credit side. Life membership fee means what? If any member wants to pay total subscription money as a lump sum, then if he pays that amount at a time, that amount is called life membership fee. Cash is coming, credit, debit side. Rent paid in advance. In which year cash is going? Current year. But that rent expenditure belongs to which year? Next year. Next year we should pay that. We paid in current year only. Since cash is going in current year, we should credit it by rent paid in advance. Then commission received in advance. Same concept. Commission income belongs to which year? Next year. But when that money is coming? Current year. In current year receipts and payments account, you should show that commission amount is 1000 rupees. Commission received in advance. Next, purchase of books. Cash is going, credit side, buy books. Then, outstanding insurance. Whenever insurance word is given to you, the exact meaning is it is insurance premium. We insured our property and we paid premium to insurance company. Then if he gives only insurance word, then the meaning is premium is paid. It's a payment. So write down in credit side. But is he giving like that? No. What is given to us? Outstanding insurance. Means we have to pay. Cash is going? No. that insurance expenditure belongs to current year, but we are not paying that now. Since cash is not going, don't record that in the receipts and payments account. So remember one important point. Receipts and payments account is prepared under cash basis. To maintain accounts, two bases are there. Cash basis and accrual basis. Cash basis means what? When cash is paid, we record. When cash is received, we record. We don't record payable, receivable amounts. But accrual system or mercantile system of accountancy, what we do here, not only paid expenditure, outstanding expenditure also we consider. Not only received income, receivable means accrued income also we consider. Receipts and payments account is prepared on cash basis, and our next account, what is that? Income and expenditure account. That account is prepared under accrual basis. Therefore, while preparing income and expenditure account, you should consider this point, not in receipts and payments account. So ignore. The next one, interest to be received. Same concept. Cash is coming? No. Income is not coming here. Income has to come. When it comes, then only it is what cash inflow to us, and we record in receipts and payments account. Clear? Therefore, even this point also you should ignore. So, after writing all receipts and payments in this manner, the next step is what? Balancing this account. Observe which side total is more. Debit side. Debit side total, write in rough notes. 3 zeros, then 6, 7, 17, 18, 1, 78,000 rupees. And the credit side total is 6, 7, 8, 9, 10, 14, 17, 20, 28,000 rupees. Then the difference is 50,000 rupees. Debit side, we wrote all receipts, and credit side we wrote payments. Generally, receipts and payments account shows a debit balance. This 50,000 is our balancing figure, no? Which balance this is? Which total is more? Debit total is more. Therefore, this balance figure is known as debit balance. Why receipts and payments account shows debit balance? Because debit side we are writing receipts, and credit side we are writing payments. So, how much we received, from that amount only we pay. Assume in your pocket 100 rupees there. Up to how much you can spend? 100 only. The expenditure may be 60, 50, 95, 100, but not 120. So your expenditure should not exceed your income. So payments will be always less than the receipts. That is why in receipts and payments account you should have a debit balance. Then which side we should write this total? The balancing figure. Which side total is less? Write down that balance in that side. So cash at bank, cash in hand at the year end is 50,000 rupees. Now two side total becomes 78,000 rupees. Okay, hope this is clear to you. In my next video, I'll explain about income and expenditure account. Thank you.